And then we'll take up our last item, AB 130.
This is a proposal to increase the amount of investing that the CSU can do, but on a very limited scale. As you will recall, we did shift the budget item that used to be separate for the capital outlay and infrastructure at the CSU into their main support budget, so that the CSU would have more flexibility to make important management decisions about their overall budget and what gets invested in infrastructure and needed repairs, and what gets invested or what gets expended on basic operations at the university. So with that shift, we are looking at other ways that CSU can do things to improve their ability to cover all of their costs associated with both their capital and infrastructure needs, as well as their support side. This change here to the CSU's current investment authority is very limited, and it's only to benefit capital outlay and maintenance, so general infrastructure needs at the universities. And it's also limited to $200 million in 16-17, $400 million in 17-18, and then $600 million in 18-19, and 30% of the total amount invested by trustees during the 2019-20 year. So there's a slow ramp up with the thought that there really does need to be careful oversight over this new authority that the CSU would be bestowed by this bill. I will say that the University of California has much broader investment authorities. It has a lot to do with how the UC was created. CSU has historically not had as much authority to make these types of investments. We think this is an important flexibility for the CSU in their effort to make sure that their infrastructure is funded.
Thank you, Ms. Bosler. With regard to the 30%, we're talking, do we know what the total universe of this pool of investment money is? I think it's maybe in the neighborhood of $3 billion?
$3.2 billion, I'm told.
$3.2 billion. So 30% of that would be almost $1 billion, but in the first few years, it's proposed to ramp up to the full $1 billion after, what, about 5 years or so. And our analysis says that CSU will not request funding from the legislature or the Department of Finance if there's a need to compensate for any investment losses by raising student tuition fees. Would that, in the unfortunate situation of investment losses, mean that given the CSU would not come to us for funds to compensate, the students could in the end suffer nonetheless?
I think that's a provision that was important to put in, because this isn't a free license to have a speculative portfolio. I think that there is ways to make investments that will you able to use your money to earn additional money without taking on significant more risk. And so I think that's something that we think is an important. I think everyone who's been working on this piece of legislation, which includes the Treasurer's Office, I think was an important component in terms of making sure that there would be that view on things and that check on those things. So I guess your question about whether students would be harmed, I think
could
that
they potentially unintentionally be the ones that could pay for the loss in the end?
No, this is a small part of the overall financing of the CSU system. And those conversations are
Remind me
really
their total budget is operating budget.
Currently about between $5 and $6 billion when you consider both general fund and student tuition and fees.
And this pool of $3 billion is independent of all of those funds. This is
it
money
includes
they've got in an investment pool.
It excludes the amount that the state provides in general fund appropriations, but it does include amounts that were initially generated by tuition.
Tuition, right.
So I think what's given us more confidence is CSU, since this was initially considered during the budget process, CSU has limited the uses of funds to capital outlay, which we think not using investment returns for operations gives us more confidence that there would be less of an impact, if any, on student tuition in the future should there be investment losses. And then the limits in the total amount of funds invested, as Ms. Bosler has described.
When you negotiated with the treasurer, for example, or any other, and CSU for that matter, was there any consideration of a sunset so that we might have a review of it, let's say 4 or 5 years down the road to see if we want to continue this?
I think what CSU has committed to us and what we've committed to them is a review after about 3 years to see whether this level of authority is appropriate moving forward. It's not in the statute, but I think CSU has been very open to looking at this again after a certain period of time.
Is there anything in the proposed language that would have that information or any additional information with regard to returns on investment to the legislature?
Yes, the statute requires an annual report to the legislature and to the Department of Finance about returns, about the investment portfolios and how it's being managed.
Okay, very good. Senator Roth, Senator Morlock, Senator Nielsen, Senator Pan, Senator Wolk. Senator Block gets the last word. You'll have to remind me in what order I just called you. Go right ahead.
I'm a little concerned about the absence of detail. I mean, I'm not much of an investor, and I look at my investment portfolio, particularly over the last couple of weeks, and it's not been pretty. And I'm concerned about our obligation as a legislature to make sure that our California State University system is funded appropriately and that the facilities are maintained. I'm concerned that in the event of a significant loss in this, what will be ultimately a $1 billion investment portfolio, that would interfere or impede CSU's ability to maintain facilities, capital projects, and the like. So, I mean, normally I'd like to see some charts, some projections, some detail about investment protocols and what the standards are and what people can invest in. I'd be interested to have UC come in and report on their investment portfolio and what the rates of returns have been over the years, both on the profit side and the loss side, and question people about how that has impacted UC's ability to manage its capital project account and whether there's been any adverse impact on students. And I'm not able to ask those questions here. I certainly want to support the CSU and CSU's ability to maximize rates of return on accumulated funds, but how do I deal with my questions in this setting? Is this, trust but verify? Do I trust now and verify later, or what?
I wouldn't take the lack of statutory provisions to mean a lack of thinking on this issue, that CSU under existing law is authorized to hold its funds outside of the state treasury, and under existing law is allowed to invest in a list of generally low-risk securities, largely bonds. And so what this proposal is essentially doing is adding to that list 2 types of investments, mutual funds, subject to registration with the Security and Exchange Commission, and real estate investment trusts. And under the existing law, CSU has developed an investment policy that governs the $3.2 billion that it invests in a single fund. I think what has been compelling to us is that of that $3.2 billion, there's some amount that isn't needed to meet daily kind of operating expenses. And so what they've proposed to us is to take a portion of that fund and to instead transfer it into a new fund that has different investment goals and different investment objectives. And I think their intent and their commitment to us has been to go to their trustees, establish an investment committee, which is required in this bill, and to come up with a policy that governs that portion that are essentially reserves that don't need to be used for their operating expenses and could be invested with some additional benefits to the university through the ability to fund capital outlay.
What's been the rate of return to date on the CSU portfolio? I mean, I think when you look at your own investment portfolio, it's year to date, it's last 5 years, it's last 10 years. What's been the rate of return, and what is the rate of return they're seeking with this new policy?
So for the current SWIFT fund is what they call their short-term investment pool, where the $3.2 billion is invested. The rate of return for the year ending June 30th was about 0.7%. They've indicated to us that an investment goal, and this would be subject to approval by the trustees, but they're looking at an investment goal of between returns of between 3% and 5%, and that they would pay out to the entities who had generated those funds about 2%. Is the plan, is the initial broad investment policy and investment objective that they've presented to us.
Well, again, I'll just one more comment, Mr. Chair. I think this is an issue that I realize CSU has thought through this. It may surprise some, but we're supposed to think through things here too. And it's difficult to do it when we don't have the data presented, the opportunity to ask the questions and to explore options. With all due respect to the administration, you all work very hard, and this is obviously a well thought through proposal, but I have concerns. Thank you, Mr. Chair.
Thank you, Senator Roth. We have Senators Morlock and Nielsen, followed by Pan, Wolk, and Block.
Will Rogers said that he would rather have a return of his principal than a return on his principal. And so having managed a little over $6 billion, I know the frustration you have with cash not generating very much, but I haven't heard the word endowment. I've just heard capital outlays. So is that bond proceeds? Is that, you said tuition, so you're building up some kind of funding over time, but I don't hear donor funds that were being invested separately. What are we doing?
Sorry, and this refers to it refers in part to about half of the $3.2 billion were funds initially generated through tuition and fees. The other half are funds that were initially generated through things like parking revenues, dorms, other type of enterprise services that the CSU offers. When we say capital outlay, it's the restriction that we've placed is if you spend these returns, those returns must be spent on infrastructure costs, either capital outlay or maintenance. And that is the protection.
Cities are not allowed to invest excess surplus funds in anything but cash equivalents, because now you have risk. And how do you explain to your students, your trustees, that the Dow Jones index went down 1,500 points in a couple days, which it can do? We want you to make money, but we don't want you to lose money. This is how people think. So,
Dow's up 366 today.
is that so far? So if you have an endowment fund, then, guy, just adopt Harvard's IPS, and have fun and get out there and do what they're doing. But if you're using funds accumulated over time out of your program services, I'm really, really hesitant to let you invest other than just using cash equivalents. I know it's been tough the last 5 years earning nothing, but you're not losing anything either. That's all I have, Mr. Chair.
Thank you, Senator Morlock. Senator Nielsen.
I'm trying to read here where there are provisions that would protect the students from fees, tuition. If this goes upside down, which it certainly could do, what are the protections for that?
Okay.
Well, I think it's the limitations that we've placed both on, there's three primary limitations. The limitations on the types of investments, that this isn't, they're currently investing funds today. This expands the list of investments that they're allowed to make, but it's not an unlimited authority or an unchecked authority. The second would be the limits on the amount of funds that can be placed into this new fund. So it's the $200 million that grows to 30% over time. And then the final limitation is on the types of expenditures that they could use the funds for. And we've been clear that this should not be used to supplement operating costs, where in a loss, the state would be expected to backfill those funds.
So the state general fund would be the backup then?
Well, the bill specifically is a commitment or is a statement on the part of the legislature in the state that we don't intend to provide additional funds, and the CSU is committed to not requesting additional funds in the cases of investment losses.
Well, those assertions are absolutely meaningless. When we get into a tough budget, they don't mean a darn thing. You know, I've had some folks from my favorites at CSU contact me about this, and I love them dearly, but I think this is risky business, particularly at what's going on in the world today. I'm just very nervous about this. Without some kind of protections, and I don't think we've got them here.
Thank you, Senator Nielsen. Before we get to Senator Pan, I just want to clarify something that Senator Morlock had raised with regard to endowment funds. This will not impact the endowment funds.
No, endowment funds are already have the flexibility to invest funds beyond the restrictions in existing law.
And have greater flexibility than we're considering for this 30% of the $3 billion.
Yeah, and I just want to clarify that, this is a very narrow authority because these additional investments that would be authorized by this bill are really focused on funding one thing, which is capital outlay and maintenance. So they're not being invested to pay for expanding programs or other general expenses at the university, but specifically related to capital outlay and maintenance of their facilities.
But again, going back to Senator Morlock's concern and how, when he was in Orange County, how he dealt with the responsibility of investing endowment funds, that with this change to this limited pool of investment money, the allowances we're proposing today would still be more fiscally conservative than what the legal allowance for the investment of endowment funds currently is. Is that accurate?
I can speak to university endowments. It would be the university endowments would not be are not restricted in the way that we're proposing to restrict these investments.
Right. So, Senator Morlock, we were just clarifying that this does not impact the endowment funds, and current law allows endowment funds greater flexibility of investment than we're considering today for this limited pool.
That's the point I'm trying to make.
That the endowment funds have greater flexibility.
Go for it in the endowment fund, have all the fun you want.
Okay.
But with regular funds out of program services, you've got to be very careful.
Senator Pan.
Because endowment funds are usually donor funds.
Yeah.
So you can go to the donors and explain to them why you've lost some money, but you can't do that to the students or the taxpayers.
Thank you. Yeah, I have to admit, I have some concerns now. And in fact, actually, some of my concerns were heightened by the testimony that was given today, because I don't think they accurately reflect the reality of what's being asked. Not only, of course, in analysis, the statement that, well, we have a provision saying that we're not going to, if we have losses, we're not going to tuition or come back to the legislature. I have to agree with my colleague, my good friend colleague, Senator Nielsen. I'm not sure how meaningful that really is. I mean, the problem is that if you need to maintain a building or it'll fall down, a classroom, you need that classroom. I mean, we can say we're not going to raise tuition, we're not going to ask the legislature, but you said maintenance and capital outlay. I mean, that's required for education. No building, they don't have facilities. So the other piece, actually, now I understand that, that what you want to do is you want to get a better return. I mean, at 0.7, you want to try to get a better return. I was also a little concerned when there were statements made saying that, well, we're going to get a better return without increasing risk, or that there's going to be no, and that can't be true. Now, I'm less concerned about the 1,000-point drop in the Dow because it goes up and down and so forth. And if you do independent and if you're doing the funds, and actually maintenance, I'm a little more worried about because that's more ongoing, right? Capital, you might be able to shift whether you do, by a year or two. But the reality is we are taking on more risk. I mean, let's be honest. Let's be honest with the public. You're asking to take on more risk in the hopes of a better return so that you don't need more taxpayer dollars put in to do your capital outlay, right? You said you're building this up over time because there are things, and the reason you take some money or tuition money or whatever else that people are giving, and even though that student may never see that building, built because they're there for however many years, there is this sort of institutional, okay, well, actually, people gave before, right, and we're accumulating money to maintain buildings, build new buildings that people need. All right, but I think, and that maybe we want to try to decrease the amount of money we have to sort of take, trim off to do that by getting a better return. And that's fine, let's say that. But let's also be honest that you're taking on more risk, okay? These are not riskless investments, okay? Treasury bonds, barring Congress acting up again, are pretty low risk. Mutual funds, and there are a variety of mutual funds. I mean, this is, at least from my understanding, it's a mutual fund subject to registration. So there's no restriction on the type of mutual funds. And there's a whole variety of mutual funds out there. You can get sector funds, which are really high risk. You can go in, broad-based S&P 500 index funds, probably a little less, but still. I presume we won't get into private equity, which isn't in this. We have a little problem with UC not being very transparent with the private equity. I have a bill trying to address that this year. So I'm hoping that since these are all registered funds, you will be very upfront about the returns and not try to hide the returns. But I'm going to assume that. But let's just be honest. I mean, it's just putting a provision in this trailer bill that says that, well, we're not going to ask for any more money and we're not going to hit the students if we have a loss, I don't think is being.
Yeah, no, I think.
Is really being, I mean, I think what you should be saying to all of us, and it is for us to decide here in terms of looking at this bill, is that are you willing to take on more risk in exchange for, frankly, having the probability of putting less? And I think it goes back to what Senator Rod said. Well, let's have an analysis of that, right? What we're looking at is that right now we only get 0.7, and the risk of our principal going down is near zero, right? Bonds have some risk there, and what we're hoping to, if we can get 0.3, but then that means that we know that there might be times where if we have something. And again, I think it'd be good to break out capital versus maintenance and so forth, because there's short-term, long-term, that there are possibilities that during an economic downturn that we are going in eyes wide open, recognizing that, we're going to be potentially punching we have a certain probability of punching a several $100 million hole in a planned capital thing if the economy goes down at certain, we can do probably like what an investment manager would do. If someone investment manager came to me and said, oh, we can invest in this and there's no additional risk, God help me. I guess they have a bridge to sell me. Let's have an analysis that actually shows so that we're walking in and saying, we made this decision with eyes wide open. We knew we took that on. And when the downturn comes, we go back to the public and said, we accepted it. In exchange, we got a better return and we got some more money over time that we got. And so some of that is, and that's what's lacking in analysis. And I felt that that's also what's lacking in the testimony when you said that, oh, well, we talked to Treasurer's office and there isn't going to really be more risk. I mean, that I just could not believe.
I apologize if that's what was what you heard, because I think, yeah, and I think, and that was an error. So
thank you.
Definitely, there is obviously more risk when you're looking at investment returns of 3 to 5% versus 0.7. There's no doubt about it. There's a balancing act that I think. There's a group that's been trying to work through these issues. They're not easy, I agree. And that is, are we willing to take on that additional risk for this defined set, this defined amount of monies, and in order to benefit from the additional increase in monies that we might get. But there is a trade-off there. And there is more risk that's introduced. I think CSU is a large, complex organization. They have a lot of responsibilities now to manage. This is just adding to their portfolio and giving them a little more flexibility to wade into making different types of investments. Is it more risky? Yes, it's more risky. I think we've tried as a group to put forward a proposal that balances that additional risk with some other safeguards and limiting factors. The fact that we are limiting the amount of money that can be invested over the next few years as we test this concept. Also limiting the CSU's ability of spending any of the earnings on anything but infrastructure. And so it's self-limiting in that way. So I think that those are things that we've done. Are they, it's a balancing act. I'm not sure if it's exactly balanced, and it really depends on.
So what we, at least what I feel like we should have, which we don't, because acknowledging the risk is actually a risk analysis. Hopefully CSU has done that before they even put this proposal to what potential impacts it could have on their budget. And that be shared with us so we can see what potential impact that we might have to take on the general fund. I realize it's all it's going to be probabilities. It's because if I could predict the stock market, I'd be very rich. None of us can do that. But I think that that's what we need to see so that, as I said, walk in eyes wide open, and also that way there's no surprises. If we walk in and we have another slowdown economy, and CSU comes back and says, "Hey, we're a little short," the issue is that building. At least we walked in and we had an idea of what we made a decision and what the consequence of that decision is. I don't see the consequences of the decision in the analysis, and I think that's what we need. I'm not saying that's not worth it, but unfortunately we don't know what the trade-offs are.
Okay. Yes, and I do understand that there has been scenarios modeled, and we would like the opportunity to get those to you, to the committee.